The cows couldn't care, but the skyrocketing Swiss franc has this dairy farmer worried. He has to sell their milk to people like this man. And cheesemaker Christophe Hess pays less for milk because he's had to cut prices on the cheese he sells overseas.
The problem is that the Swiss franc is that strong, so for some people it becomes too expensive, and there are some other Emmenthal cheese on the market. They are produced not in Switzerland, they are cheaper.
And other Swiss exporters are hurting. Producers of metals, industrial equipment, and chemicals. As for Emmenthal cheese sales, they dropped 17% in the first half of the year.
To panicked global investors, the Swiss economy feels a bit like the country of Switzerland through history. A safe haven. High economic growth, low public debt, and unemployment have all made the Swiss franc feel like a safe bet. But when everybody feels that way, the Swiss franc costs more against other currencies.
And while that may be good for investors, it's not always good for Switzerland.
If you are buying Swiss francs, you are buying some share of the Swiss economy, but the Swiss economy has to live, and the Swiss franc can rise in price, but the Swiss economy have to live at this higher value.
Some of this cheese will age for 3 years before hitting the market. By then, Rez hopes the franc will have dropped in value. But a handful of suppliers have given up, with 3 cheesemakers already closing their doors. Just being made in Switzerland isn't enough to win global consumers when the Swiss franc, and therefore Swiss cheese, cost so much. Nick Spicer, Al Jazeera, Utlingen, Switzerland.